we go. So we are recording. So thank you everyone for joining me today. The purpose of this presentation is to discuss how we develop a win-win-win strategy for ourselves, yourselves, and the applicants or contractors. I'm going to focus today on a couple of key areas. I'll give you a little bit of background about ourselves and myself. We'll talk about some strategies for contractors, and I'm going to focus the greatest percentage of the presentation today on strategies for contractors, because I know that a lot of these strategies not only apply to your applicants, but also to yourselves. So I'm going to focus a big chunk of the presentation today on the strategies for contractors. And like I said, if I'm off topic on any of this, please steer me back in the right direction. We're also going to spend some time on the actual benefits for the Teema members. And then we'll finish up by looking at the tools for how you can work with us and the strategies that we found worked well in the past with other agencies. And of course, if there are any questions or answers, I do encourage them throughout the presentation. And we can always have a question and answer period at the end as well. Now, I do see a question. Can you hear fine, Andrew? So I don't hear any of you because you're all muted. So I will need you to raise your hand or post a question in the chat. But hopefully you can all hear me. If you do have any problems with the audio, let me know, because I've got another mic I can plug in here that might give us some improved audio. Now, getting started here on who we are. So I know a number of you know who we are. I've worked with some of you, Bob, who helped put this together. I've worked with since probably about 1999. And I know definitely a lot of you who are on the call now for a long time now. We have been specializing in independent contractors since 1984. We are an ISO 9001 registered firm, and we can help people all across the country. So what does ISO mean? Why is specializing in independent contractors important? Well, there's a lot of important reasons that this is important. So ISO makes sure that we've got processes and procedures in place to make sure that we can give the consistent level of service to our clients. And by specializing in independent contractors, it makes sure that we're armed with the knowledge and information that's relevant to this very specific niche. Right now, obviously, there's a big issue surrounding personal service businesses or personal service corporations, which I will be talking about today. And obviously, by specializing in this niche, it gives us a greater understanding on these specific issues to ensure that we can serve our clients in the industry the best possible way. Because if we were a jack of all trades and we had clients in every single industry, we wouldn't really be experts in any, and we wouldn't be able to service the industry as well. So a little bit about me. I've been doing this for a while now. It's did my first T4 with my father back in 1996, and was actually working. And I think at the time, Bob was working with us while we were developing a software application that we have today. And we applied for our first software patent back in 1999. And shortly after, we actually appeared on a CBC Venture television show outlining some of the great breakthroughs we were making with the technology back then. A lot's changed since then. We're actually changing a lot of what we're doing now, and it's constantly evolving as technology changes. You know, there's now a lot more web-based services. We talk about Xero, Wave accounting, QuickBooks Online, which is now available in Canada. Tools like Dropbox and Neat Receipts and all sorts of technology that is really changing the way we do things. And it's really changing a lot of what's going on in the industry right now. And we're definitely on top of that, because technology, not only is our client base, is an area that we focus a lot of our attention on. Myself, I actually do have a technology background. When I graduated from university at University of Western Ontario, realized there wasn't a lot of opportunities for people with expertise in sociology. So I went back and I did a software development degree from the Information and Technology Institute, which sort of dates myself. I don't know if any of you even remember what ITI was, but I went back there and learned how to do some development so that I can come back and work on that software that we did appear on Venture for. So that IT background gives me a lot of insight into obviously the people in our industry and the nature, but it's my accounting designation and my professional background with my father's firm that gives me the knowledge that we're going to talk about today. So I'm a certified management accountant and a certified or chartered professional accountant as well. There's lots going on in the industry. Some of you probably know there's lots of changes, lots of things happening there. Again, we like to be at the forefront of that. I've been involved in some of the discussions on the mergers and everything that's going on in there. It's really, let's just say, fun is a good euphemism for it. But lots going on there. And again, some of what's going on new with us is we were lucky enough to be featured in the CA magazine's September edition, which was on technology, which talked a little bit about what we were doing in social media. So I know a lot of you guys are connected with me on LinkedIn, and hopefully I'm not overwhelming you with the posts that we're putting up there. But social media is an important part of what we're doing now. And we do it a lot differently than most accountants because obviously most accountants are really, lagging in this area. I know we have a lot to learn. A lot of you guys are doing great jobs with social media, and I can learn from you. And we're just touching on this now and hoping to improve. So that's a little bit of my story. How we're hoping to work with you guys is develop this win-win-win philosophy that we talk about. The goal here is to create a relationship that is going to benefit yourselves, the independent contractor, and ourselves. We really believe that this truly is a win-win relationship, not only from that standpoint, but we believe as independent contractors, it's a win-win-win relationship for the agencies, for the end client, and the applicants, and really the only loser here is CRA, and that's why I guess we're getting a lot of pushback on these issues around PSB and PSC, and I've got lots to share with you guys on what's going on that front. There have been some changes that I'm going to be happy to share with you today, and it's been in favor of the independent contractors. So I'll talk a little bit more about that, but our goal here, like I said, is to add value for your contractors and to add value for the Teema members themselves. And of course, the win for us is building our client base and expanding our organization. So now I'm going to jump right into some of the strategies for independent contractors. And I know some of this is really going to be old hat for a lot of you experienced team members. But I'm going to start really at the introductory level, so to speak. And if I'm being too academic or starting too low, please chime in and let me know. There are essentially three forms of organization available to independent contractors here in Canada. We have sole proprietorships, partnerships, and corporations. From our perspective, a corporation is the best form of organization. The only real disadvantage to a corporation is the cost of setting up and maintaining this corporation. And we've got some strategies, again, which we'll talk about today, that we can use to help minimize those initial setup costs, because that can be really the only deterring factor. Because within an organization, you have the ability to deduct expenses. You have a separate legal entity. Yes, you're doing a separate tax return, which comes back to the costs. And yes, you do have financial statements. But your year end can be any date, and that creates some tax planning opportunities. You can also shelter liability. It is still eligible for CPP, but it's not required that you remit for EI. And EI, for us, we consider that to be a negative thing. And of course, for those people who do think it's a positive thing, you can opt into EI as a self-employed person. However, from our calculations, usually this is not worthwhile because it's not something that you can opt in and opt out of. Once you opt in for the life of the corporation. So usually we don't think that's a good strategy. In addition, corporations do have the ability to do dividends. There are some changes that have come down the road now for dividends. I will try and touch a little bit on that when we come to some of the tax planning questions. But basically, the changes were just meant to align the taxation on dividends versus salary. But like I said, general recommendation is that incorporation is the most beneficial route. And that's because there's a whole bunch of financial advantages of incorporating. We talk about the small business deduction, income splitting, tax-free loans, dividends, the ability to smooth income, and increased rent and automobile expenses. And this is sort of where the rubber hits the road, and what is a lot of times the primary reason why independent contractors choose to incorporate. They're focused, on the dollars and cents of it all, and they want to know, well, where's the break? Where's the threshold where it's going to put more money in my pocket to incorporate? And people are always challenging me to come up with a number figure, an hourly rate or a gross revenue. Unfortunately, there really is no set rate because everyone's situation is different. And if you can imagine two different independent contractors, both earning the same hourly rate, let's say, $25 an hour, about $50,000 a year. And we've got one employee or one contractor who uses 100% of that $50,000 to maintain their lifestyle. So meaning there's no money left over at the end of the year. Well, for them, there's not going to be a huge financial win because they can't leave money in the corporation, which would give them a small business deduction. Now, on the other hand, let's take that same salary and put it on to another individual who is married and has a spouse who has a large salary, whose income that they can live off of, and the $50,000 that they're earning as a independent contractor, they can use towards their savings. So 100% of that can be left inside the corporation after the deductible business expenses, creating a financial windfall for them by leaving money or sheltering money inside the corporation. So, like I said, everyone's situation is different. So the best thing you can do is encourage people to seek out a professional and find out what works and doesn't work in their individual situation. But over and above the small business deduction and the ability to income split and these basic financial advantages of an incorporation, there's also some increased deductibility when it comes to expenses. And this is a little known and often overlooked fact. As an incorporated entity, to be able to deduct your home office, there's not the same criteria or requirements for working from home and meeting clients and having meetings at your home office. It really just has to be available for you to use. Sorry, I apologize. I'm just sidetracked here. I may have noticing a couple questions. Just to let you know that yes, this presentation is focused solely on Canada. For those of you who are attending from the U.S. Again, if it becomes relevant, I do have some friends. We can look at putting together something for the U.S. if we think that's relevant. We ourselves do not have offices in the U.S., but I do have a number of friends who are working in the U.S., and we can put together something for you if we think that would be relevant. So jumping back in, increased deductibility, increased expenses. If you are able to deduct your home office, first of all, this is a fairly significant deduction in and of itself, because we're going to take a percentage of your rent if you're renting, or a whole bunch of your costs associated with your home, including your mortgage interest, your property taxes, your utilities. So as you can imagine, this is going to become a very significant deduction for you. Plus, if you don't deduct your home office, a little known fact is that you can't deduct driving from your home to your work. However, you are allowed to deduct driving from your home office to your work. So if you don't have a home office to deduct, then your mileage is going to be substantially decreased. So these advantages in and of themselves can sometimes justify the cost of incorporation and outweigh any ongoing cost of maintenance. But over and above the financial advantages, there's lots of non-financial advantages of incorporation as well. The two largest are that you can protect personal assets. So you've got limited liability, whereas if you are contracting as a sole proprietor, there is no limited liability. You are 100% vulnerable. And also increased marketability. Um, you guys know better than I do that there are fewer and fewer end clients who are willing to work with sole proprietors. So this just really narrows the market. And I know a lot of people's reactions, a lot of other accountants' reactions to the whole PSB, PSC issue was to tell their independent contractors that they should just work as sole proprietors. So taking away all the financial benefits of incorporation and decreasing their marketability, decreasing the amount of opportunities that are available for them. So for us, this isn't really an ideal strategy. Not to mention that it does create some other issues with the staffing agencies themselves because it puts more risk on Teema. By working as a sole proprietor, the risk for tax remittances like CPP and EI becomes Teema's responsibility, whereas when it's an incorporated entity that you're dealing with, that responsibility is the incorporated entities. So working with incorporations is going to help protect your organization. And it's also for the independent contractors going to reduce their costs because usually the risk that's added to the staffing agencies is compensated by um, uh, withholdings that the agency would make to compensate for the increased risk and the increased cost of placing them as a sole proprietor. Uh, but obviously, like I said, you guys know more about that than I do. So I'm not going to belabor that point other than just to say that there's financial and there's also non-financial. And the bottom line here is that if the end client says you're not getting the contract unless you incorporate, most people are going to choose to incorporate. So lots of non-financial reasons to incorporate as well. Now, talking about getting good advice is a little bit of a soapbox speech here. Is it really is important to get a good accountant that educates you and asks you questions and that you can understand, and more importantly, that focuses on your niche, because there's lots of generalists out there, and when you look at accounting, you're sort of getting what you're paying for. And just like you wouldn't go to a foot doctor with chest pains, or you wouldn't hire legal aid if you were on death row, you do want to seek out a professional accountant that knows and understands your industry, that educates you on the risks and opportunities, and asks you important questions. And one of the things that we do is we offer our clients what we call full option accounting, where our objective here is to lay out all the options that are available to the independent contractor from aggressive to conservative, and let them make an educated decision on where on that spectrum that they want to fall. Because a lot of people expect tax to be black and white. And what they don't realize, particularly with corporate tax, is a lot of this is subjective. A lot of this is based on various interpretations of case law. So there's a lot of ground that's available to move beyond or move around in from aggressive to conservative. So you want to sort of make sure that you understand what the risks are of taking aggressive positions or what the lost opportunity is by taking conservative positions, and make your decision on where on that spectrum you want to fit. And that's what we do, as we help you understand those options. And we also are happy to offer the aggressive alternative, whereas a number of other accountants will probably just give you the one option, which is the most conservative option, because accountants are trained really from day one to be as conservative as you possibly can and to reduce risk. My father and I are not your average accountants, and we pride ourselves on that. I think that when you eliminate risk, you also eliminate opportunity. Now, that doesn't mean you should be taking careless risks, and I'm not going to go and encourage people to jump out the window of a 20-foot building without a parachute, but I'm going to make sure that you're taking full advantage of all the opportunities that are available to you, and taking risk where it makes sense to take risk. And I think that creates a lot of opportunity, which can put more money in the independent contractors' pockets and more money in the Teema team members' pockets. So some of the strategies that we use to add value, we have our audit representation insurance. So this helps protect those people who are concerned about the risk of being audited. We'll stand up for the rights of the independent contractors and argue with CRA up until the third and final stages of appeals, which is as far as we can go as a firm of chartered accountants. What this does is ensures the independent contractors know they have someone there to hold their hand, and that they're not being left in the lurch. For most of our clients, this is free. If you prepay for our services, we don't charge you for the audit representation insurance. And we really developed this back in the early 80s because of the PSB risk. And there were so many people fearful of what, unfortunately, still to this day has not sort of really been clarified. So the audit insurance is there to just make sure that our contractors know that we're going to stand behind you. We're not going to run away. We're happy to deal with CRA on your behalf. And in fact, I mean, dealing with CRA for a lot of people is really overwhelming and scary, which I understand. But once you've dealt with them on a regular basis, you realize they are individuals just like yourselves, and they're reasonable people. They're obviously looking for people who are being fraudulent, and some of them at the junior levels are just excessively conservative. But as you move up the chain and you get more senior and more experienced people, you really do get reasonable people. And an audit, well, time consuming and not really fun, isn't something that you should be afraid of, and shouldn't be a reason for you to exclude expenses that you are legitimately entitled to. So one of the things that we do to that end is a financial benchmarking, and this will show you how you compare to the average and the median. So we can pinpoint areas where you're above and below the average. Basically, doing an analysis that CRA then do themselves, and pinpointing those questions before CRA does. So if there's areas where you're below the average, we can ask the questions to potentially bring it up. And if there are areas where you're above the average, we can ask the questions to ensure the documentation is in place. It's not that we necessarily want to remove the expenses. It just is there so that we can make sure that if someone else is going to come ask the question, we've documented everything to our satisfaction so that we can answer the questions quickly, thoroughly, without you losing any of the deductions that we believe you're eligible for. We also do proactive strategic planning and financial quarterbacking, business coaching and management, seminars and webinars, and financial planning. So lots of financial advice and coaching that we provide to our clients. Probably the most valuable of all of these is the business coaching. This is something done by my father. He does this with any clients that are interested, and we'll look at where you are now, where you want to go, and how you want to get there. This is done in usually a minimum of 3 separate sessions with ongoing coaching and mentoring 15 minutes a month for as long as you feel it's needed. And if you were to look at what that would cost to hire someone with my dad's wealth of experience and the various industries he's worked in throughout his career, you'd be looking at substantially more than what we charge for the accounting fees. And that service is all included 100% for free. Our belief is that by giving back and adding value to the community, that this is rewarded with positive word of mouth and glowing referrals. And typically we do find that this is traditionally the case. So there's definitely a wealth of services that we do to add value. I'm probably not going to belabor that because I know we're about 23 minutes in already, and I do want to keep going to all the great strategies that we have available for you. Obviously, I want to start with the basic guidelines for anyone who's working as an independent contractor. Number one, let's be proactive, because it's the biggest risk for independent contractors is getting behind on your taxes, because I'm sure you can all relate to the fact that the more money you have in your pocket, the more you spend. And if you don't have someone withholding your taxes for you, there's certainly the possibility that it might not be there for you to pay your taxes at the end of the year. So be proactive, set aside a budget. We usually typically recommend taking 30% of every dollar that you earn, putting that into a separate fund to save for your taxes. If you do that, you'll probably be left with some money at the end of the year that you can use towards a trip. But if you're not putting money aside and you're not being proactive, there is risk for you. It's also important to understand that the more money you take out of your organization, the more you are going to pay in taxes. We are definitely aggressive accountants. We do our best to maximize deductions and reduce tax everywhere we can, but there's only so much we can do, and we're limited primarily by the amount of money that you withdraw from the corporation. Um, the objective of what we're trying to do is usually give you as low a salary as possible, because inside the corporation there's really only one tax rate up to about $500,000. Whereas personally, we have a marginal tax system, which means as your income goes up, your tax rates go up. So the more income you have, the higher your taxes are. So we want to keep that as low as possible, but our limiting factor is the amount of money you're actually withdrawing from your corporation. Now we do have some strategies available and some loopholes. There's bottom line is there's always loopholes. But to keep it simple, the more money you take out of your corporation, the more you pay in taxes. It's also important to do tax planning. If you're not proactive and you're being reactive, it's really hard to do good tax planning. Again, you're reacting, you're not having the opportunity to plan for the future, to structure your organization in a way that's going to result in the lowest taxes possible. Whereas if you're doing good, effective tax planning and you're doing income splitting, you can really substantially reduce the amount of taxes that you're going to pay. Obviously, if you were to look at the taxes for one person taking $100,000, it would be more than the taxes on two people taking $50,000. So, making sure that we've got plans and strategies in place that we can use is going to make sure that we reduce your overall tax burden. And it's important to understand that if we're doing this reactively, it's hard for us to justify sometimes the income splitting, because particularly when we're talking about income splitting with family members, particularly children, the most important thing is the flow of money. And if the flow of money isn't there, then it's really hard for us to justify the income splitting. So again, be proactive, take as little as you can from the corporation, and do some tax planning. Now, talking about bookkeeping, obviously developing a good bookkeeping system is really important. There's a number of tools out there now. Some of them are free, like Wave Accounting, which I'm a fan of. There's also great apps that are available. The issue with apps is they're not full-fledged bookkeeping systems, so you're not going to get a balance sheet. So that's something to be aware of. For some people, that's not necessary to have a balance sheet, and we certainly can work with any format that you'd like to prepare your information. Some people give us shoot boxes. Some people give us QuickBooks files. Some people give us Xero accounts. Some people give us Wave accounts. We can work with just about anything. But obviously, because we're time and materials based, the more organized your records, the lower your accounting fees are going to be. So, being really well organized, keeping your information documented, whether that's in an Excel spreadsheet or in a software, is important. I do also encourage everybody to keep copies of all the records. After 3 years, after 3 years of the notice of assessment, your return becomes statute barred. So they can't actually request information unless they can, for further back than that, unless they can prove fraud. However, they can request information up to 7 years if they can prove fraud. So to be safe, we recommend you keep 7 years of financial information. Doesn't mean you have to keep physical documents. A scanned document is considered a valid source document. So you can always scan your documents, upload them to Dropbox, put them in your own website, whatever you want. As long as you've got a legible, reproducible document, that's all that's required. Now, what can you deduct? So you've got a system in place, you're ready to go. What can you actually deduct in this system? And this is where we really come into that subjective area. If items are not specifically disallowed and they were incurred with the intent to earn income in the future, that's a deductible expense. The only exception to this is if the item is specifically disallowed. Now, what we try to coach and counsel our clients to do is interpret this as aggressively as you possibly can. And particularly when you come from a full-time background, it's really easy to assume that if you had the expense before, when you were an employee and it wasn't deductible, then it can't possibly be deductible now. And that's definitely not true. The criteria, like we said, is that it has to be incurred with the intent of helping the business earn income. And intent here is, again, really subjective. There's no way to really prove that. The bottom line is that you need to be comfortable sitting across the table from someone and being able to argue why you felt that this was an important expense for you to spend money on. Now, you may not never have to actually do that, but that's the mindset that you should have. If I can sit across the table from someone and come up with an argument or a justification for why this helped my business earn income, then you should be deducting it. And one of the common areas that we talk a lot about is business promotion. And business promotion is an area where there's a lot of opportunity because people always assume if they're going out for drinks with their friends or dinner with their family members that this couldn't possibly be deductible. Whereas I believe that in reality, most people find contracts and recommendations from their closest family and friends and their 6 degrees of separation. And to the extent that you're sitting down with these people and letting them know what's going on in your life, what you're passionate about, what you're working on, you're arming them with information to be able to recommend you or refer you when they've given the opportunity. And you never know when that's going to happen. So all of this is again, like I said, legitimate business promotion and helping you to network and build relationships with people who can help your business earn income in the future. Now, in addition to the actual expenses themselves, this again has ramifications on the automobile expense because now if you're deducting that meal with your colleagues or friends, then you can also deduct the mileage to get to that meal. So again, taking these interpretations and try to maximize them is really where we try to go with all of our clients. And the issues we struggle with is that clients usually have below average expenses. You'd think that there's a lot of aggressive people out there and they're maximizing all their deductions. But the reality is most people are actually conservative. And in your first year, I'll probably find anywhere from $5,000 to $10,000 worth of deductible expenses you hadn't thought about. And this usually comes from 3 areas: lack of knowledge, poor record keeping, or fear of Revenue Canada. So there's things that we put in place to help address these issues. Obviously, we put together a whole bunch of webinars and seminars to help build that knowledge. And of course, we've got our benchmarking analysis that helps you to understand exactly how you compare to the average and median and to pinpoint those expenses that you might not be aware of. We've also got the audit representation insurance to eliminate that fear of Revenue Canada and to help you feel comfortable. And then we've got tools to help make the process easier, simpler, and to keep your information more organized. So we've been doing this for a number of years. We've seen every possible ramification you could imagine. And we built our tools around helping those clients within this industry to help make their job as easy as possible while maximizing all of their deductible expenses and minimizing their taxes. So one of the other things that I talk about usually encouraging people to take risk. One of the areas I always try to reduce risk is around personal service corporation or personal service business. Now, again, some of you might know what personal service businesses are. I'm going to take a minute just to explain it because some of you potentially could be new to the industry. And a personal service business is essentially a company that, but for the corporation, could be reasonably regarded as an employee of the end client. Now, this has substantial tax ramifications if an employee or if an independent contractor is deemed to be a personal service business. First of all, they'll lose the small business deduction. Secondly, the rate for personal service businesses, as some of you may be aware, has actually increased. So the actual tax rate, if you are deemed to be a PSB, was already bad enough, and then they raised that rate to make it even worse. In addition, they're going to deny the majority of expenses, and they're going to charge interest and penalties, and apply these against a minimum of usually 3 years. So you're looking at usually anywhere from $10,000 to $100,000 potential impact. So obviously, the magnitude of this is substantial. However, the reality is of being assessed a PSP is the risk is actually fairly low. A special project that went on, I guess, about 2 years ago now, reassessed 234 small businesses. They found within that 96 that were deemed to be PSPs or PSCs. And of the 96, about 44 were in the IT industry. And a number of those cases are now just coming through the court systems. One of them, which was actually being supported by the NACCB, the National Association of Computer Consulting Businesses. Well, it wasn't actually fought and won in court. CRA ended up settling on the issue, so the independent contractor won his case. A win for the independent contractor and a business precedent. It doesn't give us the legal precedent that we were actually hoping for. So unfortunately, there's still the uncertainty around the industry and the issue. I think the one thing that's important to note is that we ourselves have never lost a personal service business case. And we think that if independent contractors are adequately informed and prepared, that there isn't a risk here. We believe the risk comes from people who don't know and understand the industry. The funny thing is that they would never think in a million years to assess an engineer who's working on a bridge to be an independent contractor, even if that bridge was delayed and took a couple of years to finish. Now, however, in the IT industry, if you work for a multitude of years at an end client, because the project was renewed and extended and extended and extended, they think that there's a risk that you could be deemed an employee, which is, again, proof that these people don't understand the industry and understand that projects do take more than 6 months to complete, or sometimes more than 2 years to complete. And to label someone as an employee just because the contract was extended makes absolutely no sense. It's still project based. It's still part of the contingent workforce. And obviously, the people who are applying these rules don't understand that and don't know that. Obviously, as we deal with judges who are more knowledgeable and we move things up through the higher levels of the court system, we do get people who know and understand this and the implications of it. But it still doesn't mean that the issue has completely gone away. So unfortunately, the issue does still exist. There is no definitive clarification on the issue. The best thing you can do is ensure that your client is working with a professional who knows and understands the issue, or most your independent contractors are working with a professional who knows and understands the issue, and eliminates them putting their foot in their mouth. The biggest risk is that these guys fight the case on their own. There was a case called the Gomez case, which was a guy who's actually working as an independent contractor at CRA, who represented himself. And surprise, surprise, he lost his case. It was damaging not only to him, but also to the industry because it was precedent that can be used against other people. Now that was just lost at the Tax Court of Canada, so he's got he's got a number of levels that he can go through. So he's got the Federal Court of Appeals, he's got Supreme Court of Canada. He's got more options available to him yet. So the fat lady hasn't sung yet, so to speak. But he's created an issue by being penny wise and pound foolish. And what I like in PSB to be is like a shark attack. When it happens, it's substantial, but the likelihood of it happening is really not that high. Now, to combat the issue, we put together a number of tools to ensure that our clients don't get deemed to be PSPs, and if they are deemed by CRA to be PSPs, how we can fight back. So one of the first things we developed was a sample response to the CRA questionnaire that went out around this this special project, and unfortunately, that did help some people, but other people took it and tried to respond on their own. It's a sample response. Everyone's situation is different. We encourage everyone to speak with a professional, come and talk to us, and we'll do our best to help you out. We also have a proprietary 76-page response that outlines all the various court cases from Weeby Door, which was one of the first ones, up to the Gomez case, and everything in between. And this outlines why our our clients are not personal service businesses, and helps to clarify that issue. And then, of course, the third and final level of protection is our audit representation protection, so that if they do actually go to an audit, that will help them and will fight the battle for them, and we won't charge them for that time. So that adds obviously comfort and support that makes it really comforting for people who are concerned around this issue. So now I'm going to jump into some of the benefits for you guys. So bottom line here is, why would you want to work with CA4IT, and what can we do to make your job easier? So there's really three things that we do. Is we reduce risk. Um, I'm sure you guys don't want to spend the time, nor do the senior people at Teema want you providing financial advice to your independent contractors. You should be encouraging them to speak with a professional, whether that be us, or maybe you're giving them a couple of options of people to choose from, but they should be seeking out independent professional advice, so that you're not putting yourselves at risk, giving them information that may or may not be correct. In addition, we can help you close more leads, because we provide an unbiased perspective on it, whereas sometimes there is a perception that a recruiter might be more focused on closing the deal than helping the independent contractor themselves. So when we can come in with a perspective that helps support your recommendation, it's just going to help close those leads more easily. And 9 times out of 10, we are going to recommend and encourage incorporation. Of course, we have to keep in mind that we are a professional firm of chartered accountants, and we're not going to make a recommendation that goes against what's best for our clients. So it's if you're making a recommendation that makes no sense for the client, we're going to tell the client that. But I'm pretty sure that you guys wouldn't be wanting to do that anyways. So 9 times out of 10, your goals and our goals are aligned, so it can help us make sure that we're helping the client and creating that win-win-win philosophy. In addition, we can help you close leads faster. What I mean by that is, particularly in situations where contractor and applicants coming from a full-time position and they need to incorporate, or they need to set up a business, you can work with us to expedite that process. All you have to do is give one of my sales team a call and say that this is a rush, we need it expedited, and we'll work with you. And then you're not dealing with a third party that may or may not be getting back to you. In addition, because we're involved, we can deal directly with you and keep you updated, give you the GST number that you need, make sure that you have the articles of incorporation, and ensure those important deadlines are made and met to help you close the lead faster. Now, one of the other benefits that we offer, specifically in Ontario, is a no-fee incorporation. Now, unfortunately, no fee does not mean free, because there are a number of government filing costs associated with incorporation that are not actually our fees, but are costs by the government. Now, we do recommend a provincial incorporation over a federal incorporation, even though a federal incorporation does look like it's cheaper. With a federal incorporation, you do have to register in the province that you're operating every year, and there is a cost of that registration. And by the 3rd or 4th year of operation, the additional costs of the registration have eliminated the savings, and by the 4th and 5th year, it's actually costing you more. So we recommend an a provincial incorporation. We do no fee incorporations for all provinces except for um, Eastern Canada, just because there's some implications there. The difference is that outside of Ontario, the prices are higher because we don't do the actual paralegal work in-house. We don't charge for any of the time that we spend helping to set up the minutes, or helping to set up the subscription to the shares, helping to set up the share structure, which is probably the most important aspect. So you're going to get, you or your independent contractors are going to get financial advice from a professional to make sure that the organization is structured that normally you would pay a legal professional or an accountant to give you that advice, and we'll do it free of charge. The only cost that there's going to be are any costs that we ourselves incur. Um, like I said, within Ontario, you're looking at about 495, which does include the minute book and shares, does include your share certificates, does include your articles of incorporation, does include the HST registration, does include your initial return. It basically includes everything you can possibly imagine. So there's no further cost. The only way there would be any additional cost is if we did a name search for you and that name came back as taken and we needed to do a second name search. Although that is very, very rare because there's now something called a pre-name search, which now not a valid name search for the articles of incorporation does help us pinpoint whether names are already taken. Some of the other benefits that we've developed as an incentive program. So obviously we've got the no fee incorporation, which is, excuse me, a potential value add to the Teema team members, as well as the independent contractors. But we've also put together some retention rewards and a quarterly competition for the team members as well. So we use Salesforce to track and monitor all the referrals that we get from agencies, from clients, from the website. And what we'll do is provide retention rewards for any client that retains our services. So we do a small token of our appreciation. We're not allowed to actually tell you that there's a set amount for every person you refer because there's some issues with the Institute. But what I can tell you is that we do rewards and we do show our appreciation anytime a client is received. We also do quarterly competitions, whether or not the client retains. Now, one of the requirements is that as long as we get a minimum of 15 referrals from an agency, whoever is the top referral will get a prize in that quarter. If there's less than 15, then it gets pushed to an annual competition. So there's always a prize or a reward for keeping us in mind, though I'm sure that that's not going to be the reason you would. It's just something to show our appreciation and to recognize from our position that we do appreciate you taking the time and the effort to work with us. Now, big question here is how are you going to work with us? And what's the best way, or what are the tools you can use for working with CA4IT? So the web is probably the most common method that people connect with us. We can develop branded landing pages for the Teema organization. We also have an online calculator that shows independent contractors the bottom line of how much they're going to save by being incorporated versus being an independent contractor. So I'll put these together and share these with you guys, I guess probably through Bob. And he can share it with your organization so you can access them. And included is going to be an online registration form where you guys or your independent contractors can register for a free consultation. However, probably the best method for working with us is still the phone. The ideal method is that one of you guys or a recruiter from your team will actually give us a call and say, hey, we've got this applicant. This is his situation. I think he would be a good fit. Can you give him a call, or here's his contact information? Can you follow up with him and take it from there? That's a great way to work with us. Of course, you can always have the applicant give us a call. However, the reality is if you give our number to the applicant as opposed to giving the applicant or giving us the applicant's number, there's the likelihood of that phone call actually happening decreases. Now, of course, if you are going to make a recommendation or a referral to us, obviously you don't want to just call and give us the number. You want to make sure that you have permission from the applicant for us to give them a call. You might want to just say, hey, I've got an accountant who specializes in this area who can help answer a lot of your questions. Would you like me to have them give you a call? And of course, if phone isn't your thing, email is another great tool. A great thing about an email is that you can copy both the members of our team as well as the applicant. Shoot us an email with the specifics and the detail. And again, helps us to understand, again, whether there's any urgency, whether there's any specific issues. You can provide us that background that's important to helping us make sure that we're providing the best possible service to the independent contractor. And again, you can give our contact details to the applicant or our website, but probably the least likelihood is for the applicant to actually email us themselves. So I am going to take a minute here to see if I can unmute everyone. So bear with me and try to open up the conversation to a little bit of Q&A, because that's pretty much the wrap for my long-winded speech here. I know I did get a little long on the tooth on some subjects. Hopefully I hit some salient points for you guys and added some value. I don't see too many chat questions. Fortunately, I have to, I think. So I'm unmuting some of you now. Does anyone have any questions for me? No? I guess that means either I did a really good job or a really bad job. Not sure which. Okay, I think I've got you all unmuted now. Okay, well, I guess if there's no questions, I'll wrap up. Again, I wanted to take this opportunity to thank everyone for logging in and remind you that I am available if you have any specific questions. You can give me a call, shoot me an email. Be happy to speak with any of you one-on-one. Thanks again for your time, and have a great day.